What part of Chicago did you grow up in? You
I'm
grew up
from
in the
Maryland.
city? Oh, you were in Maryland?
I grew up in Maryland. It's Rockville.
I didn't
Good
know
old-
that.
Good old Rockville, Maryland.
You a Commanders fan?
Yeah, that was a brutal loss.
Yeah. Well, happens.
I mean, it makes it worse is against the team in Chicago. So I going to work, hear it from everybody else. Brutal loss, though.
We're gonna go to a Commanders game, Michael and I.
Oh
In
yeah,
a couple weeks. Yeah, we're gonna go to the Lions game.
The stadium's a piece of shit. I hear. Can't be worse than MetLife.
they were supposed to move back to DC.
How is it? The stadium's garbage though, right?
It's been a while. It's inconvenient to get to, just like Soldier Field is in Chicago.
MetLife is the absolute worst.
Yeah. I went to a Jets game last year.
Oh.
Yeah, the nothing's more inconvenient than the Giants
I left.
stadium.
It's horrific.
Early, and I was glad I was able to get out of there.
Yeah.
It was a Monday night football game against the Bills. I think they hit a
Did they win?
Hail
I'm
Mary.
just kidding.
No, Bills won, but I think Rodgers threw a Hail Mary at the end of the first half that hit.
No. The shade.
The Gen Zs want to have an office Halloween party.
We do.
What does that mean? Like physically in the
Can
office,
I
or
buy a 12-foot
Yeah.
skeleton?
They want to come in costumes. What do we do? Make
Allow
it on
I'm
the
not
day that I'm
going.
not here.
Oh my goodness! On here.
I saw. Oh,
What day would what day would it
Thursday,
be?
the day before.
Thursday the 30th?
Yeah.
All right, Halloween costumes.
Yay.
Okay.
wait a minute. Thursday, October 30th.
You want me to put it on home office?
Do we have a
should
show
be
that day?
Inside Out characters.
Yeah, home office.
You can be angry, Josh.
Thursday.
You know, Halloween was on
October
Thursday last year too.
30th.
Was it?
So I know it was an issue. but,
No,
like,
it's not Thursday though.
We
The
dressed
actual
up.
Halloween's Friday.
You guys dressed up with Dan.
Even better.
30th.
I don't know dates. I don't even know when's Thanksgiving. It's the same time every year.
When is it?
November. Is Thanksgiving?
It's the Thursday.
Oh, it's the third
last
Thursday.
Thursday.
Last
Of
Thursday.
the month, but the date changes.
Duncan, you see PTA's new masterpiece yet?
I want to.
Anybody?
I'm going this weekend.
Was
No.
it good?
Not yet.
You liked it?
I love it.
It's a good movie, obviously. I mean, it's hard to deny it wasn't a good movie. But what the is
Sounds
wrong
like you're
with
going
people? PTA has brainwashed people. Like, he's tricking all you guys. It's not the best movie of the last decade.
I don't think it
It's not even close. People are going
What
nuts.
I say that anytime there's a
No,
movie.
one battle after another. People are
Oh.
going nuts.
Yeah.
It was a good movie.
Not everyone agrees that it was even good.
I had a good
I've heard some
time.
negative comments about
But
it.
it's 14 hours long. There's some really great stuff in there. But people are like, legitimate. There's people saying it's one of the best movies of the last decade.
Eh.
What?
I did hear a lot of great things before it came out, but
It's a good movie.
I really loved it. So I loved it as a movie going experience. I saw it on a giant IMAX
It's a good
screen,
movie.
Yeah.
but I would not even say it's in his top 3.
Yeah.
Like the director, and it's definitely not a top 3.
It had its
Leo
moments.
movie.
But it's so long, and I don't get the PTA fever.
My kids saw Gabby's Dollhouse on Monday, and they're raving about it.
I never heard of
Really?
that.
What is that?
It's a kids' cartoon.
Oh.
movie.
Should Michael watch that?
I take my kids to see movies all the time, but it's been a minute. There hasn't been a good movie for kids.
Well, you wouldn't take your
Thanksgiving
kids to that movie
No.
either.
No, I got 8, 6, and 4.
You have 3 girls.
3 girls.
8, 6, and 4. Oh man, you're in it.
Yeah.
You're like in it.
In it.
Are you in the burbs or the setup?
Yeah, burbs.
Yeah.
Glen Ellen, west suburbs of Chicago. I was telling Josh, it's like right next to Wheaton, and Wheaton's like this quiet financial hub that not many people realize.
You know,
Yeah,
I
First
asked
Trust.
about Wheaton this morning
Yeah.
because we had somebody reach out from Wheaton I said, how far is it from the city? But it's apparently it's a little bit too far.
With no traffic, it's 35, but in a
There's always
traffic, yeah, an hour. Could
Yeah.
be.
With no traffic, it's
Dude,
hilarious.
traffic is
like
so
at 2 in
bad.
the morning. You mean?
Yeah. Well, I mean, hey, in the commodity space, I'm getting down to the office, and if I'm heading down there, I catch the 4:50 a.m. train. So if I'm ever driving,
4:50 a.m.
yeah,
It's
hit
wild.
the
Are you in the
gym
gym at
before-
3:00?
Yeah,
You psycho?
before
You're one of those?
I hit that at 5 a.m. 5:30.
I won't get in the car in Chicago anymore. I just do the blue line.
Yeah,
I'm never doing that again. It's
Blue Line. That's where we came from. The name.
oh,
I lived.
there you go.
My first house I bought in the city.
Oh,
was
is that
off-
what it's named for?
duh, right?
down the
It's,
street from the Blue Line, and then you take the Blue Line and you get off in Jackson, which is next to the Board of Trade, and that's where our office is.
What's the best Italian restaurant in Chicago, in the city? Don't tell me about a place in the suburbs that I won't go to.
Okay, old school. I love taking the team to La Scarola, and that's right off the Blue Line and west, off Grand Street. Really
What
good.
neighborhood is that? I know some of the
it's like-
neighborhoods, not all of them.
It's called West Town, River North.
I know River North.
Yeah, and then if you're going like newer age, Monteverde is phenomenal.
Okay, I haven't been to either of these places. What's the best? So I took Michael to Gibson's just because
Yep.
obligatory.
took me. I feel like, what was that, your date? We went together.
But I had been there before you, so I took you. You see how that works?
Yeah,
Okay. Took Michael to Gibson's.
We had great lunch there.
It was great.
good.
We didn't like do
Which
a
one though?
whole
Downtown,
porterhouse.
or did you do the
No, the Magnificent Mile one.
Okay.
Like the
Yeah,
one that's by all the fancy shit.
Yeah, the Rush in Division.
And I've been to Joe's Stone Crab for steak. Do they call it? What do they call it? Joe's?
Yeah, it's good.
That was great.
It's good.
And I've been to RPG steak,
RPM.
RPM steak.
That's where my favorite
Wait, what's
spots.
the RPG? Rocket propelled grenade? Why is it called RPM?
You know, I wish I knew, but it's Bill Rancic and Juliana Rancic. And so when I think if I got this right, when he won the Trump show, what you call it back in the day, the first one,
The Apprentice.
he designed that the Trump Tower, and they had connections to Chicago and did the RPM Italian, and then the success.
Oh, that's where I ate. I didn't
Then they
eat the
did
steak
RPM
one. I ate
steak.
at the Italian one.
Yeah.
What's the one that sits like right over the river in like a glass cube? Is
That's
that-
RPM Seafood now.
Oh.
Yeah, they have
what
a
the
third
hell?
one.
Whatever. I liked it.
So many RPs.
But no, we always do our holiday party and at RPM Steak. I love the place.
But all right, but so if somebody's like, I'm going to be in Chicago one night and I want to have a great steak, where do you send them?
RPM Steak or the Gibsons,
Dope.
the new Gibsons Italia, which is in downtown, like the business area, the Loop, just right outside the Loop.
I like Italian steakhouses.
Yeah.
That subgenre.
Yeah.
They just reopened Pietro's here in New York, which is one of the most famous, maybe the earliest version. In Austin, you ever been to Red Ash?
No.
It's like Italian steakhouse.
Okay.
Flames.
Good.
I like that kind of thing. So that's what you would do.
Yeah.
Gibson's Italia.
Yeah, I love the El Molino Prime. I told you, I always go there.
Il Molino.
We love it.
Il Molino, you can't go wrong. Yeah, El Molino Prime, the steak.
Yeah. So I get the steak and a little bit of side of
I'm getting all fired up over this. It's almost too much for me. All right. How we doing, boys?
I think we're looking good.
This is an important man.
Coming in.
All right.
Oh,
3
Vizio,
claps.
Vizio, Vizio, Vizio.
Very confident. Nice.
Today's show is sponsored by State Street Investment Management and SPY, the first U.S.-listed exchange-traded fund. With SPY, investors gain liquid and cost-efficient exposure to the S&P 500 index. You can't predict your future, but State Street Investment Management can help you create it.
Getting there starts here. Access the power of the S&P 500 in a single trade with SPY. Visit statestreet.com/SPY for more information. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Visit statestreet.com/IM for a prospectus containing this and other information.
Read it carefully. SPY is subject to risks similar to those of stocks. All ETFs are subject to risk, including possible loss of principal. ALPS Distributors, Inc. Distributor. What is it, 213? All right. Ladies and gentlemen, welcome to the Compound and Friends, the world's best investing podcast. It's not even close. If you're listening, you already know this. Hey, we have a first-time guest with us. Michael and I are so excited to chat with this young man, this young gentleman. Bill Baruch is the founder and CIO of both Blue Line Capital, an investment advisor, and Blue Creek Capital Management, a commodity trading advisor located in Chicago, Illinois. Bill has extensive experience in the financial industry as an advisor, trader, and manager. He began his career as an... All right, who wrote this? This is way too much already. We're already at the... Is this you? You wrote this?
I just dropped it
Bill
in there.
wrote it.
I dropped it in there.
All right. You've done many things.
Hey, you were a male model?
Yeah, exactly.
You were at a firm that was bought by MF Global.
Yeah.
How long did that last? How long were you there for?
I think it was 3 or 4 years before it blew up.
You ever meet Corzine?
I never met Corzine, but I would tell you they went public and the stock never went higher. It was I think the high was the day it went public. They threw this massive party.
When, is this 2010?
I want to say 2008 when they bought it.
Oh,
Yeah.
no. When did it go public? I'm trying to remember.
MF Global went, I think, public in 08, 09.
Okay.
Yeah, and when that went public, they did this big, massive party at the Opera House. And
That was the all-time high?
That was the high. And then they start buying stock for the company too. They forced you to buy stock, and never up on it.
Yeah. What an unbelievable situation. That's one of the largest blow-ups ever.
What were you doing there?
Eighth biggest bank proceed.
What'd you do wrong there?
Yeah, right. No, I was at a trade desk, and I learned a lot there. I mean, there was really good people in our division, and we had obviously nothing to do with what Corzine was doing. But that was back in the day at where order flow had to go through the floor, or your people are calling it in. And
This is the CME.
yeah, the CME.
Right.
So you're calling NYMEX, you're calling the Board of Trade, you're calling the CME, and there was some stuff electronic still, but options all obviously going straight to the floor. And so we had a lot of metals traders at our desk, and we actually there was people that were trading the Nasdaq bubble that moved on to the metals, because that was the last big bull market in silver. We hit 50 in 2011. So you're watching a lot of people, a lot of order flow. I was able to learn a lot, what works, what doesn't work. Saw people blow up, saw people make a lot of money, and learned little things in the business, and had a good mentor, and it was a great experience.
Your commodities experience help you better understand like supply, demand, fear, and greed as when it pertains to stocks?
Yeah.
I would imagine that it would.
Oh, absolutely.
It's all the same shit. It's all the same people.
Yeah.
It's like the same people issues, like the way we buy, the way we sell, what drives people to make decisions. I feel like it's not that different.
It is. The only difference, I think, with the equity markets is like the flows that have to go into the equity markets compared to the commodities.
Oh, that's a great point.
You're not getting those flows. So commodities, there is like some elasticity that has to kind of come back in. I mean, right now you're not seeing it in like silver and gold, but that's always the fear, is like when does that supply come out? Is who has silver that is going to start selling, or whatever commodity it might be that's moving? Is it wheat or is it crude oil? I remember the days in 2010. Crude oil went to $150. And so it was a brokerage shop, MF Global. You're opening accounts day after day. Everybody's calling. People are taking home equity lines out to buy crude oil at the time. That was like the top. And that was all-time high in crude oil.
But not right. And that aspect of it, not so different from what you see with tech stocks, like at the top of a tech bubble.
Yeah.
I have this theory, I never wrote about it, where I feel like the stock market in the 70s was a commodities market.
Yeah.
Because to your point, you didn't have that persistent inflow coming in every 2 weeks with 401k money and asset allocation money. Stocks were treated like commodities, and they were way more volatile. And the characteristics of the stock market then looked more like a commodity market.
Yeah.
And today they don't at all.
Yeah, much more cyclical names leading. I mean, who were the large Exxon, AT&T,
Yeah.
GE? When was Kodak? Was that the 80s? But yeah, that was, I mean, the names were completely different in the makeup of the largest.
But I just
names.
think the way people thought about stocks back then, they thought about them similarly to the way they think about speculating in commodities. It's 50 years later, and market has gone mostly up. And we have the advent of the 401k, and now I just think people think differently about it. They look at it more like a place to stash away savings rather than just to trade. They do both now.
Proven results. I mean,
Yeah.
especially after the 2000. I mean, you've seen 10, 15% average annual returns. So people they know they're missing something if they're not invested. It's proof, and it's
The only guy saying buy and hold in the 70s was Jack Bogle.
Yeah.
Now everybody says buy and hold. So that's a big difference.
After you blew up MF Global, what did you do next?
I left and worked at so I never wanted to work for, a big shop ever again after that happened. It was a bad experience, seeing that play out. And so I started with a firm with another gentleman, and I ended up starting my own firm, Blue Line Futures, in 2017. In 2017, one of my partners, Oliver Slope, and I got together and we wanted to put out good, consistent research for clients and kind of take that brokerage move to the getting that content out. I was doing videos every day, talking about the S&P and trading ranges. We were putting out daily research. That has grown. We put out a lot of content with our
You're very good at the videos, the walking videos. You're like the only one that can actually pull that off. Most people look ridiculous. You're good at it.
Thank you. Back in the day, it used to be I just stood in front of a wall drop and did it in the office.
The walking is better.
The walking's better. It's more casual, keeps it tighter. But as a company, Blue Line Futures, we put out a ton of content. I still write a note every day that covers the S&P levels, the trade. Phil Struble, who's here listening, he puts out metals research every day.
Shout out to Phil. Phil's in studio. He's not really listening to you. He's on his phone. So he's already heard enough from you today.
Yeah, we got a lot of agriculture content that goes out. We have a lot of the just across the board.
Okay, awesome, love it. I want to start with the private credit stuff that seems to have infected the rest of the stock market today. It's been a while since we've had one of these financial market driven risk off days.
Mm-hmm.
I'm not saying it's good, but it's sort of refreshing.
Yeah.
It's a change from the relentless monotony of AI stocks being up 2% every single day.
Mm-hmm.
It's been boring.
There's a lot of money has been made, but now it seems like we're in a new phase. People are really paying attention to this stuff. What do you think?
Yeah, I mean, you're getting some two-sided volatility after Friday's tweet, and you're starting to see it play out. And again, I think it's that old cliche saying when the shore comes in, who's not wearing shorts, and I think you get that volatility happening, and you start seeing some of that stuff show up
On Tuesday.
Where are the cockroaches?
Yeah.
That's all I want to know.
On Tuesday, Josh and I were talking about financials, and it's what you see in a healthy bull market. You saw BlackRock hit an all-time high. You saw JP Morgan, not quite, but great earnings. Goldman, just solid numbers. But what we didn't do on the Tuesday show was divide or normalize, like what's it doing relative to the S&P.
Mm-hmm.
And actually, if we did do that, and especially on a day like today, the XLF divided by the SPY is breaking down like hard, like pretty disgusting. That's
not great.
What timeline is that chart?
This is daily.
Okay, wow.
That's ugly.
Yeah.
So it's down 2.7% today. S&P is down 70 basis points. Like, this is not good.
Yeah. I would say definitely not good. And it's been about 3-4 weeks. Some of the big names, the big money center banks, Goldman Sachs, they put a high in, and they jumped up a little bit after report. The banks always jump up a little bit after the report when it's a good report, but it's where they are a week later is what I always like to think about it, because you get that excitement of the report, and then it comes in, usually the next 2-3 days. So I think that the next few trading days are going to be critical for what that sector.
Well, this one is sell the news, clearly, right? Let me read this to you. This is Bloomberg. A pair of blowups. Oh, on Wall Street, everyone's a friendly rival until the losses start. A pair of blowups in the credit market have sparked a war of words over whether banks or private credit firms are better positioned to weather a broader downturn. So Jamie Dimon said there's never one cockroach. Famously now, it's been repeated 8 zillion times. Mark Lipschutz from Blue Owl Capital fired back, saying the issue was in loans that banks led, so Dimon should be scouring his own books if he wants to squash more bugs. He did that on TV. I saw that. He's sort of a badass. He's got like a little Jason Statham thing going on, this dude, right? He came on TV with no tie. Like, I'm not a banker. What?
I do respect.
And he's like, no, you're a fucking cockroach.
I respect the horseshoe look. This guy's got the Costanza bald, but like growing out on the sides. I respect. I should.
He's not cropping it.
He's not afraid. He's like, yeah, I'm bald with hair on the side.
Yeah,
so what?
What are you gonna do about it?
I'm a billionaire.
What do you make of this stuff? Is it just noise, or is it noise that potentially could lead to something?
I think it can lead to something, but it's more seismic. I think they would have to get deeper. I got a good stat. When my research guy here, shout out Dan White, 19,000 private equity funds, and there's 14,000 McDonald's locations.
Yeah.
There's more private equity funds
There
than
aren't
McDonald's.
enough.
And so a lot of people are jumping in with little experience. So I think when you get that, it's it could become bigger.
So my take is, for now, and I said this last week, I'll say it again. I'm obviously a tourist.
Very complacent.
A tourist here. It's not nothing. It's not nothing. But the question is, like, is it really something?
Mm-hmm.
And of course, we will know with the passage of time. That stat, it just smells a little shitty. Like, I need it to be normalized a little bit. It sounds very odd.
Mm-hmm.
There's 19,000 funds. How many firms are there? How many of those funds are $4 million? Like, I think the point is valid, is that there is a lot of activity in private markets, obviously.
But the implication of that stat is, to me, what's important. If there are, let's say there were 19,000 funds, that's too many, all chasing the same opportunity.
The question is, if how many of those funds can you get your money out of if you could? And then if you could, who goes to the exits?
Well, there's no liquidity in these funds.
Exactly.
I mean, that's the point.
That's the point. Yeah.
But to me, you look at that number of funds and you just picture the competition to write loans. Because if you raise money, you want to make loans. If everyone else has raised money also, which is the case, it's trillions of dollars, and they all want to make loans, what happens? Well, you start cutting some corners.
Yeah.
We'll do it faster than the other guys. Okay, great. We'll do it with less covenants,
Yeah.
less protection.
Yeah.
Okay, that sounds great too. We'll do, like, all of a sudden, and I'm not saying that's definitely what happened. That's what people are worried about, is what happened.
So with this story is fraud, allegedly, it looks like. But
Which
you could
one? Which one? Now we're on to 5 different isolated incidents.
So hold on, it's First Brands and it's Tricolor. Is that what else?
Have you not seen what Zion's Bank is saying and Western Alliance is saying?
I was not on the news today. What
They
happened?
are.
I know regional's getting crushed.
They are writing off loans and suing people, saying that fraud has happened, and that's why the regional is getting crushed.
So here's what we know. We know that the market is not going to underreact,
Mhm.
right, to any negative news. It's going to overreact. Maybe or maybe not. Maybe it is underreacting. We'll find out. With that stat, though, you could also say, all right, well, there's 26,000 mutual funds and 14,000 ETFs. I'm making up those numbers, and there's too much money. And yeah, maybe that's sort of the whole point of all of this, is that there is too much money.
Yeah.
There's too much money chasing too few assets. Valuations are high. The prices of everything is high. There's a lot of money in the system.
Well, I go back to Josh's point too, where you do have this number of funds. I mean, maybe you don't know the size of each one, but that the money's coming in. The money has to be going somewhere. It has to be being used, which forces poor investment decisions. And I think that's where the problems happen.
they can't sit on cash.
Yeah.
That's not the type of business that they're in. They're in the business of allocating the money so that they have the ability to bill on it. And you will do things if you need to bill. What do we got here?
That was Kobe. He showed me he got 100 on his test.
Oh, that's so cute. Was his test on private credit? Because if not,
It was senior secured
John, give
ins
me
and
this.
outs.
Give me this chart.
Gotcha.
So I was talking to Callie today in our research channel, and Callie watches like all the spreads, and thought this was interesting. We were saying like there's no spike in credit spreads in junk versus investment grade or junk versus treasury, but interestingly, this is triple C versus double B spreads. So the junkiest junk versus the quote unquote highest quality junk. And here's something starting to, it's not crazy, but it's also not zero. I don't know. I look at the regional banks, business development corporations, look at the junkiest junk, and I just say like, maybe the market's overreacting, but how could we be so sure?
Well, the other thing to add is on the regional banks, are they loosening their lending standards in order to win these private credit deals? And is that going to come back to haunt them? And
Probably some yes, some no.
Yeah.
Right. And we're all going to find out.
find out.
We're going to find out together. Anyway,
we don't know shit about this. Let's talk about the stock market.
I think it's notable because other people are reacting. I don't think it's notable because the whole world's on fire. I want to ask you about the metals world. So the best performing industry group in the stock market this year, metals and mining, up almost 100%, which is insane for an industry group of stocks. That means some of them are up way more than that. Are you like blown away by this? We've never seen this before.
I mean, I am. You can't not be surprised at the velocity.
Gold is up 60% on the year.
Well, the velocity of the move that's taken place just over the last 3 to 6 weeks is absurd. I mean, it's in a good way. That's got to be a little surprising for anybody. But I mean, you go back to the turn of the year and you start seeing what was bubbling up in gold, and we get to 3,000, and you see Trump policies, and you see the de-dollarization. You see the central bank buying consistently, and Basel III, which actually took effect in July of 2025. So it's now officially a tier 1 asset on central bank balance sheets. So you look at that. I mean, our thesis was gold's going to go to 5,000. We just didn't think that this is going to happen this
quickly. You didn't think it would happen by Christmas?
Yeah.
Okay. That seems to be the trajectory that we're on.
Yeah.
No one's selling.
Well, there is no reason to sell. I mean, the most of the buying is coming from central banks, and they're putting on their balance sheet, and it's a move away from the dollar. And there's we think there's proof that China has understated their gold reserves by 20%.
You think they're quietly accumulating gold?
Oh yeah, certainly.
Okay.
And so I think if gold, and I've sat down with a CEO in the gold mining space, and he asked me, Bill, what would make this? What would ruin this? What could make it go down?
What would ruin this uptrend in gold?
Yeah. I said at the end of the day, I don't know what would, because the massive selling that would take this away would have to come from central banks, and they're not selling. What we could get, though, I mean, we could certainly get a 10%. This at the time, gold was at 3,500 to 3,700 or so, it was just breaking out. And yeah, we get a 10% move, probably if just deleveraging. Maybe at this point it could be a 20% move, deleveraging.
I was going to tell you, the only thing that ruins this is a global recession where these central banks are forced to sell gold in order to do stimulus in their own countries, because that is literally what ended the gold bull market in 2011. European sovereigns, Asians, they all, so like.
But how does that change if it's a tier one asset now on their balance sheet? It is as good as cash.
Yes, but if you need the money, you need the money.
Yeah.
The other thing that could end it is if people get too excited about gold.
Yeah.
Like big leverage coming in on the long side. I don't know. Philip probably has like better guesses than I do, but like it eventually does end, but it doesn't have to end for 10 years. Like
it could be a big cycle here right now.
It could be a big deal, right?
It definitely. And I think what could end it? I mean, there could obviously be a number of things. And you look back, even COVID, and I remember that it was like the first week of March, whenever that Monday, coming out of the oil, Saudi Arabia and Russia oil news, and oil's down $10. Gold made a high that morning, but then within weeks in the COVID shutdowns, it was, I think, $300. I think it was $1,700 to $1,400. And so gold really sniffs out inflation, and it doesn't make, and it may not react how you would expect during the inflation. Like in 2022, Fed's hiking rates, the dollar is strengthening, gold was whacked, but it smells inflation. So it's going to see it, and it's going to react prior to the inflation. So I would say what we're seeing right now potentially could be more inflation, but then you're also getting the GDPs of Germany and Japan and things like that. That's why the dollar is actually rising. And over this last couple of weeks, when gold's been breaking out, which is a pretty interesting phenomenon.
That's rare.
Yeah.
I wanted to ask you, why is silver rallying so hard? And then I'll ask you the same on copper. What's happening there?
What's borrowing rates, lease rates? You can't get the physical silver, and they're trying to.
So explain. We don't have like a hardcore commodity trading audience. Explain what you mean by that.
Well, I guess the best way to put it would be, lease rates. So in order to move silver around, in order to get the physical silver, you can't move it from spot to spot in order to get it to London. And there's lease rates that, in order for borrowing costs, they're surging because you can't get the physical silver. So
who needs the physical silver?
It's in order for processing, industrial uses, and then you're also getting demand for buying. I mean, it's more than 50% of the use of silver now is industrial use.
I thought you were going to say Jared.
Yeah.
Okay.
Well,
I thought you were going to say teenage boys in Massapequa. All right, go on.
Yeah, I mean, so I think it was a little unique that China went into its autumn festival 2 weeks ago, and they are a supplier of silver. They're not exporting necessarily. That could be a driver if they decide to export silver, put it down. But there was definitely an alignment where those lease rates surged. It costs more money to get your hands on silver. I guess best way to put it, around the time of the autumn festival. So
there's a scarcity
of silver for sure, right?
And tons of demand because silver typically rallies with gold, but has higher beta.
It usually follows gold
even more.
too. Yeah, it usually follows gold too. So this has been sort of bubbling under the surface. And I think once it got above $40, there's always the conspiracy theories that the banks are selling paper silver against the physical, things like that. But I think once it got above 40, the ceiling was lifted, and I think it changed the dynamic.
Silver just made its first inflation-adjusted high since the Hunt brothers' failed attempt to corner the silver market in 1980. I thought that was remarkable. Like, what a moment.
Just to let you guys know, it's the physical back ETFs over in London. Those are the ones that need to secure the silver. So as they get more investors in those ETFs, the demand that the amount that they got to show on the books.
It's investment demand turning into physical demand.
Yes.
Wow. Duncan, I'm impressed.
That of course was Paul Tudor Jones. Thank you so much for being here, PTJ. We appreciate that. How do you play the upside in the metals? I know you're both commodities and futures guy, but then I know you own Newmont and you're involved in the mining stocks too.
Yeah, so let's start with the futures. The CME group has done a really great job of making micro contracts over the years. So because futures trading is of notional value, and so the main contract of silver It's a 5,000 ounce contract of silver. So at $20, it was a $100,000 contract. Now at $40, it's a $200,000 contract. At 60, so you get it. The value of the contract's larger. So the volatility you're withstanding is larger.
Oh, in dollar terms, the swings are huge.
Yeah, they're huge.
Yeah,
So
yeah.
now there's a micro contract that's been around for a few years now, and it's a 1,000 ounce contract of silver. Even at that point, you got the 1,000 ounce contract of silver now is what is the notional value of what silver was. I mean, so options volatility has surged. One of the ways, again, we were invested in, and I run a metals called Metals Alpha. It's a CTA. It's an investable program. We've been in this pressing the gas on this most of the year, and right now we've lifted off the gas because the volatility. We run our strategy with looking at the average true range, and the ranges have just been massive. So the
longer the rally continues, the larger that ATR becomes, which raises your potential risk for when it reverses.
You think this is a blow off top? It's going vertical.
I think we go to 70. We could. There's calls for 100. I think it was Bank of America. So,
what's that on silver?
Yeah, silver. Yeah. So we put on when we got out of the futures, and we're just kind of we are tiptoeing in the futures because the ranges are $2 to $4 a day, and we don't want to get caught in a big downdraft if it does happen. And we call options. We did some call spreads about a month ago, like out to January, 65, 75 call spreads.
And the diagonal caterpillar box spread?
No, something simple that we could capture if it does have that.
Why a call spread?
Because if it has that bananas move where it just goes up to $5 to $10 over what it has been, if it keeps this pace up, we're able to capitalize on it and know what our risk is to be invested in it.
Oh, so you can put yourself in a box.
Yeah.
And get the upside, but not be fully exposed.
Yeah, a $10 wide spread, 65, 75, goes out to expiration end of December. And initially we're buying those from 10 to 20 cents.
Who else is doing that trade along with you? You seeing a lot of funds doing that?
I think a lot of funds may use options to manage the risks in this type of environment. That's where my expectation would be. So, and we're managing, we look to protect our downside as well. So we're doing different proprietary strategies, managing delta and tail risks.
Now, is it true that only silver can kill a werewolf?
That in
or vampire?
Yeah,
Vampire's
stake.
a wooden stake.
Yeah.
All right. I want to ask you about copper. What the hell is that about now? That's its own. That's its own thing that's going on.
Copper's
people are shocked by this.
That it's lagging.
Yeah.
Yeah.
Well, wait. I don't understand. The rest of the world's stocks are outperforming the S&P 500. China's stock market's up 38% this year. Why are gold and silver rallying this hard and copper is not reacting to better than expected everything overseas like it normally does?
Well, copper was up over 5.5. And if you remember, it was like the July 30th Fed meeting. And that was when Trump was really going after Powell a lot. And so right when that Fed meeting was dropped, the White House announced that the copper tariffs, but they're exempting the cathode, and the cathode goes in the refining process to make the copper, and so that actually copper fell historically 20% that day.
Yeah.
So it really hasn't. There's a lot of damage in the chart, but and then most recently, like yesterday, you're hearing about more exports from China, and they're going to ramp up their copper.
You just don't have the same scarcity profile with copper that you.
And I think you will over time. But when you have a 20% drop the way it did, there's a lot of damage to that chart. Even somebody like myself that wants to invest in it, I've only tiptoed in it because it just feels like there's a lot of damage to the upside, and it's gonna a lot of dead bodies overhead. You look at it that way. There's a lot of supply technically overhead, so I think it has to chew through that. If the metals in general keep going higher, I think copper's going to have to join the party. But physically, you look at the data center investments, you're looking at other things that are going on here, the infrastructure spending that's going on here in the U.S. or around the world, the emerging market economies they're stepping their game up and investing in their economies. Copper is on and going to continue to be on high demand, but you're not really getting that growth out of China either as that demand. I think just early in the week, it was negative CPI number, again, surprisingly in China. So you're not getting that growth, and that's been a headwind as well for copper.
You still like gold and silver here?
Am I putting new positions on in gold and silver
so
here?
You're letting it ride, but you're not pressing. You're not pressing the bet.
Yeah, rolling up some stops, and but in our metals, our mining alpha portfolio that you mentioned, we own Newmont, we own Coeur, we own Barrick, we own no more than 10 names is kind of the idea in that portfolio. It's concentrated. We launched that portfolio in July. And I mean, they were already up, only half as much as they are now, but which was already a lot at that time of year. We didn't have time to get all that cash to work. And
I was going to say, they're not letting anyone in.
Yeah. So we got about 2/3 of the cash to work, and so any pullbacks we do want to be buying.
Are you telling people that you intend to hold those forever, like be invested forever, or would you say to the people, look, this is a gold bull market and it's one for the record. It's an amazing one, but if it ends, we don't want to own these companies.
Well, if you look at it,
they're not good companies. They never have been.
Well, right now there's gonna be juggernauts, and
doesn't last.
But then what the phenomenon here is you have gold prices higher, and you have input costs, energy, and that they have to purchase and use.
Oil prices lower.
The oil prices are lower, and so that's a tailwind to the business. I think that's something that makes it a longer cycle, and I think we could be a year and a half into what could be a 5-year cycle.
Just wait till the copper miners discover quantum computing, and then boom, just easy, extract the copper and off and running.
You haven't really thought about AI in the gold market yet. What's this purple chart? What are we doing here?
What we're doing here is we're talking stocks.
All right, let's go. What do you got?
All right, Vanda has some great data showing retail activity in the stock market. And what they're showing is that the highest amount of one-day inflows was last Friday.
Wait, where is that?
Josh, this is called a chart.
Oh, I see.
And the black line is the stocks,
and
the purple line is the volume. This is
I'm looking at the bars.
Yeah, there you go. You got it. You got it.
Wait, but we went down.
They bought
so
they bought the dip.
He's new here.
They bought the
dip.
So
the stock market went down a lot on Friday, and retail buyers went all the way in.
And it worked. And it already worked until today.
So let's talk about the stock market. Chart Kid Matt did this thing for us. When the S&P is up 7.8%, drawing the line to make it work, I suppose, going into the fourth quarter, the average return for Q4 is 7.7%. And in fact, going back to 1950, there's never been a down quarter when the market is up this much going to 3 quarters. Now, N equals, I don't know, enough, 15 or so. Thoughts?
Well, I think one of the tailwinds to a fourth quarter rally is the seasonality that you get in August and September. And we never pulled back in August and September. So, if we start October lower, yeah, it's easier to finish higher. I do think we're going to have a strong finish of the year, and I think the Mag 7 can really. I mean, some of those names are not done much this year, and I expect strong earnings reports, and I think they're going to be a leader to finish out quarter four. But the tough thing is, it would be, we're seeing a lot of volatility right now. The VIX is above 20. It's at 24, 25 here today. And that leads to further volatility. I'm surprised we haven't seen more downside this week. And we may. So there's going to be a little bit of a rebuild a little bit potentially. But at the same time, every time this market is sold off, it hasn't been down for more than 1 day or 2 days. So I think we're in this little vacuum of, there's no government data. We're waiting on earnings, and no one. Everybody's kind of waiting.
Earnings start next week.
Yeah, waiting. No one's blinking yet. So
we sort of need it. We sort of need a Microsoft report to get us to stop looking at regional bank charge-offs.
How much more did they spend on AI? Right?
Yeah, I'm gonna guess. I'm gonna guess a lot more.
This is a good one. We could skip the next seasonal one. The bottom line is, absent some news that knocks us off course, and maybe it's the cockroaches, the managers are going to chase, right? The people that are underinvested chasing to your end. It happens every year. This is some good stuff from War and Pies. So we are in a blackout period where companies cannot purchase their own stock. So War and Pies has a chart that shows the typical annual cycle for S&P 500 buyback volume. And of course, there are blackout periods, and we're in one right now. But
they have to report earnings, and then it's getting back on.
But what he's showing is that once the buying picks back up, he breaks it down statistically. You do see pretty significant positive returns for the S&P 500 companies.
Oh, it's noticeable. Stocks have a better period of time during the buyback phase.
I mean, I think it's obvious, but
it's a bid.
But the point is, we're coming up to
continuing bid.
I like that idea. Nobody's really talking about buybacks anymore. I don't know if we're making a record this year.
You know why? Because it's AI is just sucking the oxygen out of it. That's all anybody wants to talk about.
And every earnings report, they're talking about raising their buybacks too. So the buybacks are there for sure.
Yeah.
So Bill, does this make you nervous? We are obviously in a retail is having a moment. You could call it a mania. Some of the returns at some of their favorite stocks, quantum computing, nuclear, uranium, just scary
Flying
charts.
cars.
All that shit.
Yeah. I mean,
So Trading Thomas 3 on Twitter shared that retail has been buying calls for 24 consecutive weeks, which reached a record high last week. I mean, there's just no chill.
I think there's certainly, and that's what's made me nervous this summer a little bit. I thought we'd get that seasonal pullback, and I love what we were able to accomplish in our portfolio into July and August, and so it made sense for us, to trim a little bit and kind of wait and watch a couple rounds, have some flexibility, and the situation hasn't deteriorated at all. And I mean,
September just kept going.
And
Yeah.
so I think that's the interesting thing. You get these retail flows that keep pushing it higher, but at the same time, I mean, you look at you buy those many calls. I mean, there's the put call ratio has hit a level that it does cap the upside returns in the near term. So I think that's something that what we're going through this week, it could be timely. And I don't think it's going to be seismic. I don't think it's like I mean, you even go back to March of 23 when these literally banks were not, the doors were closed and shut down the next day. AI rallied us out of that. And
Can I ask you a crazy question? I don't even understand where people are getting the money to do this.
Look at this chart. So put a pin
Can
in that.
can we go back to that though?
No,
Like,
look at this. Look at this.
what is this?
This is showing mega cap tech. So for all the talk of like we're in a bubble, the mega cap tech are significantly underperforming the crazy names. So it's mega cap tech divided by non-profitable tech. And if you invert this, the ratio here is wild.
Mega cap tech is no longer exciting enough
No,
to
it's not.
attract retail trading.
These names are going sideways, a lot of them, the mega cap tech.
that's the frothiness.
They want that Oklo.
Yeah, that's the stuff.
That's what they want.
Makes me nervous.
But put this chart back up, the retail options trading. What is this, like out of people's fucking paychecks? What are they doing? What are the dollar amounts involved in this?
You know what really got it?
Because how do you keep losing unless they
What do
keep
you mean
winning?
keep losing?
They're making
Dude,
money.
they're
making
killing
money.
it.
They're
The
killing it.
retail call buyers
Killing.
continue to
They're
make money.
They're crushing
Killing.
it. And you know what really got it going? And I know from talking to people firsthand, I was a little bit in the first one. I haven't done much more after that, but the Eric Jackson on that open call.
Mm.
And I think that
Yeah.
was the big start.
That was the spark. You're right.
That was a spark. And we've seen a number. He's had a couple other calls since then, but that's what really got people super excited.
He came out with the stock at $1, said it's going to $80. It did go to 10.
Yeah.
I don't know where it is
Looks
now.
pretty vulnerable. It's at 7-11.
Yeah,
Oh,
don't
wow.
try charting. Don't try
I
charting.
know you
a
can't charge
Mania.
a 6. No, I know. It could be at 15 next
He
week. I
might
know.
get Drake to buy $1 million worth of stock. It'll go to 50. You really don't want to chart that. I agree with you. That seemed like it was a moment.
Yeah.
And then ever since, people are just like, what's the craziest thing I could do?
Yeah, it's like,
But-
what am I buying today to make money? It's like an assumption that you're going to make money today if you just buy
Casinos
something.
open.
Yeah.
But that's such a good point. Where's the money coming from? Because it's not only retail and it's not only options. So last week, Bank of America showed that single stock inflows were the 5th largest in history. So single stocks, and the biggest ever for a week that the market was down at least 1%.
I mean,
They're not
just seems
scared.
like the firepower is endless. That like they don't react negatively to headlines anymore. Really, the
Well-
dips are bought the same day. They don't even wait a day.
Well, somebody had a great take on Oklo, and you could use this for a lot of these companies. There's no exposure. There's no revenue. They're not sensitive to interest. It's just whatever. There's nothing tethering it to fundamentals.
I mean, a lot of these names, I mean, they're unprofitable. They're not making money. I mean, it's a story.
They're
And,
equity,
I mean, and that's
they're
what-
equity
that's what-
financed.
that-
They're
that's
not
what
subject to borrowing rates.
a lot of tech always is. It's not what you're doing for me now. It's what you're going to do for me in the future. And this is really extending that narrative and saying, and it's pulling that cash in there. You're buying a story. I mean, these are a lot of people. I'm sure people that have made money in Bitcoin, people have made money in other things, and they're moving that money around. But they've made money hodling. They made money doing things. And I'm not dogging
Dude,
it at all.
making money is not dumb. Making money is not dumb.
They're. I mean, these people they're doing their thing.
I'm sure that there will be. Listen, it is a mania. A lot of these are pre-revenue names. I would guess that there's going to be a handful of winners over the long term.
Yeah,
maybe at lower valuations, but a lot of these are going to just be complete wipeouts.
The companies though are not stupid. They're all selling equity. They're all doing secondary.
Allegedly, the CEO of one of these companies, I don't know if it's Oklo or Onic, I don't want to. I forget which one it was. Allegedly, like sold all of his stock.
Really? I mean, we've gotten multiple calls into us at Blue Line Capital, like clients like, why can't you buy this name in my portfolio? Like, well, listen, I mean, the music's going to stop at some point. And it's going to be done. I'm as a fiduciary, we can't do that.
Why don't we own this piece of shit that everyone else just made 400% on?
Yeah.
Right.
So those are the conversations that some of my team has had. Some have come to me, and it's. I mean, I'm not talking dozens, but maybe nearly.
It's
a dozen
hard.
calls,
You have to just send them a link to. You have to send them a link to Robinhood. Tell them download the app. Do whatever you want. We're not doing that.
But let's just bring it back to, because I really think it's important that people that are listening don't hear us talking about this pocket of mania, which it is, and say, oh, the whole thing's a bubble, the whole thing's a house of cards, because it's important that we zoom out.
Yeah.
So Yuri and Timmer has a great chart that shows the good news is that the earnings are doing the heavy lifting as we enter year 4 of this bull market. The PE ratio is only up 1% year over year, while earnings are up 11%. That is critically important. The PE is only up, this is for the S&P, I'm guessing, only 1% year over year. So all of this expansion that we've seen, it's earnings.
Mm-hmm.
So it is fundamentals. Companies are growing. Margins are at all-time highs. Like, there is good reason why stocks are going up,
absolutely,
despite a lot of the nonsense.
NVIDIA is underperforming its earnings growth.
I mean, we see NVIDIA as almost relative to other pockets in tech a value buy. There's some great names out there.
It's wild, but it is that way.
Yeah, I mean, look at like a name like Micron. I mean, we own that in portfolios. It's like our number 9 holding. We have a 3% holding of it. And I mean, I've trimmed it a couple times, but there's names that are really growing earnings substantially. So I'm not sitting here calling this a bubble or anything. I mean, I think when you look at some of those non-profitable, frothy tech, it's kind of a little bit of its own pocket. It's out there. But the names that we're all investing in, the names that are driving the S&P, the names that are really driving the NASDAQ 100, I mean, there's a lot of money being made by those companies, and I think they're going to continue to grow very well.
I want to go back to one of your charts. John, can you put up chart 7? Mm-hmm. So, Bill, this is yours. You mentioned the put-call ratio. Walk us through why you think positioning makes it as such that we might sort of see capped upside from here.
Well, it's if everybody's, it's all, the boat's invested on one side. I mean, so if everybody's invested in that downside protection, whatever it might be, it also has an impact on gamma dealers and really what we've seen a lot of this year, where earlier on coming out of April, it really helped the market move. But at the same time, if everybody's extremely negative and buying puts, move's not going to play out.
It's so weird. Everybody has one foot out the door, right? Like as soon as there's some bad news,
what is this showing? This is the inverted put call ratio.
Yeah, not puts are not being bought enough right now.
Puts are not being bought enough. Yeah, which is like that's what you want to see. That's April. That's what you want to see. Yeah, we have the opposite of that.
Yeah, you see the April move. Yeah.
So you think we are susceptible to a downside whoosh?
Yeah.
Got it.
Yeah, this is what. So when the put call ratio is at this level, it's typically caps the upside a bit. And
it's toward the end of a big rally, not early in the game.
And there has been false signals. You can see like quarter 4 of 24, second half of 24, false signals that came out of April. Because remember, coming out of April, I mean, everybody got so bullish so quickly, and so no one was buying puts anymore. The coast is clear, and it kept going. So there is false signals. It's just one of the things to look at.
You have another one, John, chart 10. You say since the Fed cut rates on September 17th, markets have responded as if it were a meaningful pivot, with precious metals and small caps outperforming. The small cap rally deserves. I mean, today it reversed because you got a lot of regional banks in there. But what do you think it was about what happened on September 17th?
I think you get this Fed rate cut. You get the Fed rate cut last September. I mean, the economy is, we're 3% plus GDP. Credit spreads, this is before, as of September, there may be a little wiggle, nothing to worry about.
Consumers cooking.
Consumers inflation is it's not where the Fed wants it, but it's not not a headwind too much. So everything is sort of almost in that Goldilocks form, and you get a rate cut. They're just juicing the economy, basically.
So they did a rate cut they didn't have to do on September 17th.
Essentially, that Fed pivot, and it's essentially it's investors are saying, buy me whatever's not going to be devalued, because it's better than if they're going to go in this. Trump has stacked the Fed, or will stack the Fed over the next year. So he's going to get his cuts. They're saying they're going to get the Fed rates down to 2% maybe if he gets his way over the next year.
Well, if he installs the Fed chair by the end of May, which is what's going to happen, it may be Besant,
Mhm.
it may be Eric. I don't know. Whatever he wants, there's nobody left to stop him.
Yeah.
Rates are not staying where they are now, and it almost doesn't matter what the economic data says.
Yeah.
Because he's got an opinion that low rates good for me, low rates good for the economy. Don't care what the data is, lower the rates.
So the labor market is low hiring, low firing. Consumers are absolutely fine. Bank of America just reported they serve almost everyone. Nothing to see there. Everyone is saying the same thing. Hyperscalers continue to spend, and the Fed is cutting.
Yeah.
Hard to be bearish in that scenario. On the other hand, if the cockroaches come out, and as always, risk is what we're not talking about here. So yeah, you never know. But if you zoom out and you just place those two things, it's hard to. I think bulls have the upper hand.
Yeah.
You have to give them the benefit of the doubt.
Get a little scare here would be healthy.
Great. Let's do it.
Let's. I mean, it would be great to see if we get
Little 7 to 10.
a full 5%.
A full 5%.
Full 5%, maybe 7.
But isn't it wild though?
Yeah.
A full 5. A full 5.
Full 5. Wow.
Whoa.
Yeah.
What's this S&P consumer staples sector chart?
All right. I want to talk about this. Our Fred Todd-Sohn and others at Ned Davis Research do great work. So let's start with chart 16. And we're talking about, man, it's kind of wild. The staples have never been a lower percentage of market cap. Well, guess what? Ned Davis shows that the market's not dumb. The percentage of earnings that the staples are producing is also at an all-time low.
They just don't matter anymore.
But listen, so John, throw up chart 12. So this is from Todd. Consumer staples and energy and healthcare and utilities are lower in the S&P than technology. Now, you might see this and understandably conclude, and I love Todd, that this doesn't make sense. Bubble, I'm out. Okay, you have to look at the earnings. So check out this chart that Matt did. Chart 17, please. So similar to Ned Davis, I was inspired by them. I asked Matt to look at this. On the left hand, we're looking at the market cap of staples and healthcare. And we're looking at their net income. And guess what's happening? They're moving together to the lower right. The market cap is 14.8%. The net income
share,
is
meaning
14,
percentage of the whole market.
and they're the same exact thing, 14.8 and 14.7. It's almost like the market isn't dumb. And on the other side of the coin, you have Apple and Nvidia. They make up 8.3% of the total income, up from 4% in 2020, doubled. And yes, the market cap is higher. It's 13.2% because obviously the market's going to get excited and over-extrapolate and overdo it.
Yeah.
So maybe we're seeing that, but the market is getting it right by and large.
So this is an answer to the people that are like, the whole thing is dominated by tech. Yeah, because the earnings are.
The multiple, too. I mean, the multiple of staples relative over the last 10 years is at the upper end of its band.
Crazy.
So I mean,
Imagine
why?
if it was low.
Well, yeah. Well, I mean, I think the situation could be different. It may be driving some of the money, right now, potentially. I mean, obviously,
What is it? What's the multiple on staples?
So 30,
21.
21.
So-
It got as high as 22.5, but 20 over the mid range is just under 20 over the last 10 years.
So you're paying 20 times for Procter & Gamble that's growing 1% a year.
Or 50 for Costco. Which do you want?
Costco, Estee Lauder. I mean,
Walmart.
Walmart's 39. Hey, Costco's 48. Estee Lauder 46. I mean,
Let's
Why?
do utilities. This is a fun one. First of all, year to date, John, 18 year to date returns by sector.
This is eye candy.
This is crazy, right? Okay, so utilities are the best performing sector year to date, up 23.7%. But they're so small as a sector. Even after that, their contribution to the S&P's year to date total return is less than 0.5%. Think about how insane that is. That's how tiny the utility sector is relative to the whole market. That it could be up as much as it is and not even move the needle for the market. We're in uncharted territory now.
yeah.
And these stocks have decent sized market caps at this point because they've gone up a lot. But like in comparison to the Microns, the Netflixes, they don't even matter.
Yeah.
So I thought that was interesting. Here, let's just equal weight utilities, equal weight S&P 500. Look at this divergence. March 2024. Basically, people that thought utilities were like grandpa's stocks, nope, that's not what's going on anymore. Now you have record-breaking electricity demand all over the country, all over the economy. And guess what? They're going to treat these stocks like they're Alphabet and Meta now.
That's the huge thing is, I mean, if you're going to drive AI and power AI, the power demand, and we have a slide for that too. The power demand is incredible. I mean, you can see some of the forecasts here, natural gas. So in our portfolios, we don't own a traditional utility. It kind of happened quick when these things just started going. But we're also, I mean, we own KMI, we own LNG, we own CCJ, the utility, uranium. Some of this, but the natural gas is going to be a massive player. Look at the forecast on this chart from 2025 down to 2035. What natural gas in the yellow is going to do as empowering.
Why are natural
demand.
gas stocks so terrible then?
Well,
I own them. They're not.
the price of natural gas is-
The explorers, the producers. I don't mean the transmissions.
Ooh,
Yeah.
LNG is breaking down hard.
Yeah, it's
Yeah.
it's not responded to. I mean, the price of natural gas has not moved much, and they don't really. There's legal things to it now, but basically, you just say hypothetically, they just burn it. They just burn it away.
It's just endless supply.
Yeah.
Like we're like the Saudi Arabia of
Yeah.
natural gas.
So the transporters of natural gas are what's going to need the people that own the pipelines, like a Kinder Morgan, and then LNG. There could be more geopolitical things because they're not making money on the chenier on the movement of the price of natural gas. They're making money on the movement of natural gas. So if they're going to bring natural gas to
if they're going to
Europe,
export it,
yeah.
that's the play with that stock. Okay. I don't know. Can you buy the utilities here?
We have some names on our watch list, like NEE, a couple others, but that's a
New
name.
Era.
Yeah.
Okay.
I mean, it's some of the high quality stuff that can drive with it, but I would like to see a pullback in general.
You're seeing a potential outside day in XLU today. We'll see
Okay.
where it closes, but
Those stocks are basically AI stocks now.
Yeah.
There's none of the volume that's coming into those stocks has anything to do with dividends in the way that it used to.
Absolutely. I mean, and the other thing you got to be careful out for us too is I mean, our top holdings are NVIDIA and Alphabet and Broadcom and Micron. It's like how much more AI
It's
exposure?
the same trade.
Yeah. So if you get a DeepSeek moment or something like that, your whole portfolio is going to get smoked. So we have a lot. We look at more ballasts within our portfolio and how we
Listen to
build
this
up.
stat. The utility sector is expected to report the second highest Q3 earnings growth rate, 17.1% of all 11 S&P 500 sectors, second only to tech. How many other years historically have there been where utilities were putting up high teens growth? None? Maybe none? It's
Yeah.
possible.
God, I mean, you can't imagine many.
It's a pretty exciting time to be in the market and have things like that going on. So, I mean, at least I think so. You have a Mag 7 take going into earnings? Like where are you most confident? What are the names that we should watch, and what are you watching for?
I think the bar is high, but I think the bar is in the right spot for some of the names like that have not done much this year. Amazon, I think the communication around cloud at the last earnings call was, it really hurt Amazon. It kind of pushed them away, and then you had these just amazing numbers from others. And I think that's something that if Amazon can deliver the results and communicate well,
That stock has done shit this year.
I think it could finish the
I
year
own it.
very strong.
It's
Yeah.
pissing me off actually.
It was one of our higher conviction plays coming into the year, but as you move and when you raise a little bit of cash here, and then you put that cash back into something else, we haven't been adding to it. It's still up there. If we get the good results, it could be something that could really run into the year. I can't talk about Micron enough. There could be a real repricing.
Is that your favorite chip stock right now?
It trades like a commodity. The one
'Cause
thing
it is.
it is.
It always has been.
I thought the interesting thing, the high bandwidth memory is making it more efficient and power efficient to run these chips. Morgan Stanley, I think it was, upgraded, and they upgraded the story of DRAM. And so I think there is some interesting stuff going with Micron. And if you're seeing price targets go to 220 to 240, but there could be a real full repricing in this name if if it all things are clicking, and then the forward multiple, what it's like it's 7,
Yeah.
or no, it's 11 and a half.
It gets valued like a commodity.
Yeah,
Is the way they've always done it.
I mean, imagine a 20 multiple on that.
What if it becomes a less cyclical business?
Yeah.
I mean, that would be the dream come true for
Yeah.
long-standing Micron shareholders at long last.
You know, no. I think a pullback into earnings is a good thing.
Yeah.
Right. I'd rather, as a shareholder, you want to see like a little bit of Dow creep in. You don't want to see these things flying into earnings.
To that point too, you also remember last August, and when we were getting that pullback from the highs, and if you miss, if they're missing, it's going to hurt them more. So instead of being down 3 to 5% in an up market, you're going to be down 5 to 10.
It is asymmetric.
Yes. Yeah.
The losers are punished more than the winners are rewarded.
Correct.
What do you think of the setup on Tesla going into earnings? It's rallied hard this summer and fall, and it's not as though the fundamentals right away are about to get any better.
Say strong to quite strong.
Yeah,
has it reacted to earnings? So I mean, when's the last time it's really reacted to the earnings
it
report?
just doesn't matter. I guess the auto earnings on the auto business, it doesn't seem to matter anymore.
I mean, it is a breakout. I mean, really could be if it keeps moving higher from here over the end of last year high before it fell out. I think it's more of a momentum play, and how Elon communicates and what's the next event more than the earnings.
What do you do with NVIDIA here? They're not going to report till the end of earnings season. Stock just made a new record high the other day. See, it was green today with everything else red.
Is it the least volatile stock out there?
It's become very unvolatile.
Yeah.
I feel like this can't end until this is over 200.
It's got to do it. I think, I mean, we've actually seen volatility of NVIDIA kind of come out ahead of its earnings report often. But you'll also, going into its earning, when it gets its earning, we know what all those big names have already said. How much spending is Microsoft and Meta, and you get those numbers, and that's going to correlate to what you
I said that to Josh last quarter. It's anticlimactic because you already heard from all their suppliers.
Yeah.
You know what I think this ends? When OpenAI comes public at $1 trillion valuation, the biggest IPO ever.
Yeah.
And it's a flop out of the gates. And it's not because there's anything wrong with OpenAI. It's just because at a certain point, enough is enough.
Yeah.
That'll be I don't think the market can withstand a meteor of that size hitting the surface of the planet. It's $1 trillion. It'll soak that money out of all these other public companies. People don't understand when a company comes public.
Josh is a big money come out guy.
When a company comes public, the people who own it privately are selling it to new people who don't own it.
Yeah.
They need to pull money from somewhere to buy it. But it's a tautology, but it's the actual fact that you're selling stock to the public.
Unless
it's a public offering of stock.
$7 trillion comes out of the money market funds and boom, problem
if it's
solved.
$1 trillion IPO, the valuation, and they need to raise $200 billion to facilitate the offering, people are going to sell other shit.
All right, so what do you think about this theory? I feel like bulls and bears, everybody's waiting for this to end, for it to burst.
Is that not a good
no
framework?
That would
How poetic would
that
it
would
be?
make the most sense.
The OpenAI IPO
that
in
would make the most
2026
sense.
is the
What
end.
if the most frustrating outcome is the most likely, where this just we just plot along and there is no
That is not the most likely.
No. That's not what I said. I said the most frustrating outcome is the most likely. Like in an LOL world, where the most frustrating outcome
I see.
is there's no bust, and maybe there is no boom, and maybe we just plot along and we grow into these valuations and there is no kablooey.
Other than the fact that it's never happened that way.
No, I know.
That'd be great.
Okay, a lot of things happen that have never
2%
happened.
interest rates at the end of 2026 and continued AI spending. I mean, money's going to be forced into everything that's not, it has to be invested into things that are not going to depreciate. Invest your money somewhere. And that's what's driving gold. It's driving silver. It's driving, it's driving commodities, but it's driving AI investment. It's driving these call options into, all these non-profitable tech names.
So it does seem like a scramble for people to get their money out of dollars and do anything else.
pretty much.
Except
but
the dollars aren't crashing.
dollars aren't crashing, but the inflation
it
never
is
went
crashing.
away.
It is dollar is crashing. It's crashing to gold.
Oh, stop it.
Oh my God, one of those. So I got a text from Sprinkles the other day. Should we be doing more gold?
Shut up.
You want to see it? I don't have my phone, but wait, I'll find it
Should
right
we
here.
be doing more gold?
Should we be doing more gold? Hold on.
All right.
I'm gonna.
Bill's like, all right, on second hand.
I'm giving the sign to Phil here.
Why? Are you
Phil's
saying-
going to step out.
Are you saying
He's
Sprinkles
gonna make
is
some
not
sales.
a sophisticated investor? Here, you want to see it? Dead ass. Wait, she sent me a whole bunch of nudes, so I got to be careful scrolling through this with you here. Hold on. I want to give you the exact words. Oh, here she is yelling at me.
What did you say? I'm curious to hear your response.
I was like, shut the up or something. No. No, I told her we have gold. We're fine. We have everything. We're invested in everything. We never stop investing. I can't find it right now, but it was to the effect of I heard it's doing really good.
Yeah, I mean,
Now, where the hell did she hear that? Below decks?
CNBC commercials.
Good Morning America.
She's not watching CNBC. No offense.
I mean, there's always a
offense
gold
to me.
commercial somewhere.
She must be. They must have been talking about it on either like she doesn't watch The View,
Costco.
like a Bethany Frankel podcast, or she listens to Scott Galloway and Kara Swisher. She likes that one. I got to find out from her where she heard this. If I hear it's The View, I'm bearish. No offense to anyone, but I don't think it's quite there. Gold at 5,000 will be a huge deal and will become mainstream news.
Well, congratulations to everybody that bought as much Costco gold as they could last year.
Yeah. Oh yeah, they were right. There's another example where the crowd was right. The herd was not.
Yeah.
The herd is not always stupid.
All those things we just never bring up that at the time of the end of this is the top. Oh yeah, Jensen Wang signed a bra.
Yeah.
2 years ago.
Nvidia, yeah, half the price.
He did.
Was it night? Was it?
That should have been the top.
Remember the watch party, the Nvidia watch parties?
Yeah.
Yeah,
That was like
Why
hundreds of
wasn't-
percents ago.
Right? Why wasn't that the top?
Right.
When the earnings call happy hours. Why?
One of these days.
Right. All right. Bill, did you have fun on the show today?
I had a great time.
Dude, we love you. I have to tell you something. I get the list of who's going to be on the show with me every morning. And when I see your name, I know it's going to be a good show. So I hope you feel that way about me.
Of course I do.
Would you like to say some nice things about me now?
Of course.
Okay. This is a good space to do that. Hey, we always end the show asking people what they're most excited about. You got a lot going on. What's out on the horizon for you?
Well, outside of markets, I'm excited. We're going to my family. We're going to Cancun next week,
Okay.
and I got 3 daughters and another family that we are really close with. They have 4 daughters. They're all like best friends. The kids don't know that they're going together.
Oh, they're going to be so
Yeah,
excited.
and we're
When are they
different
going to
flights.
see each other at the airport?
Different flights.
Different flights.
So we land at the same time,
Unreal.
and they're going to see each other at the airport, and it's going to be like exciting.
Oh, very cool. So so you're gonna run into each other at the Cancun airport.
Yes.
Probably in the line at customs.
Yeah.
Okay.
Awesome.
That's gonna be cool. How long are you going for?
I think just 4 days.
Okay, good enough.
Yeah.
With kids, that's
yeah,
plenty.
just-
4 days is plenty.
Yeah, you plan it. It's late October, Chicago. You don't know if it's how the weather's going to be, and if we get into holiday season and stuff.
Okay, I have a plot twist for you. It's Michael's family that's meeting you there. What do you got going on? What are you excited about?
I'm excited for the Knicks. I'm excited for.
What's the first regular season game? It's like
Is it Friday against the Celtics? Yeah,
this
it is
coming
Friday.
Friday.
Yeah.
I think we win that one. I think we win that one too.
I mean, I hope so. They are depleted.
Uh,
Coming in strong. Coming in hot. You a big Bulls guy? You
Not
guys-
so much.
Bulls stink.
No,
no, he's from
Sad
Maryland.
state-
He's a
sad
wizard.
state of
He's a
affairs.
Wizards guy.
Well, they're even worse.
Did you grow up
worse.
watching the Bullets?
I did.
Okay.
I did.
Jawan and Weber and
Yeah.
Sheed.
Oh yeah.
What a horrible franchise. No offense. I mean,
I think Jordan played his last couple of years there, and that was just brutal. I mean, I did go see him play. It was great.
But you had the 80s, early 90s Redskins to
Yes.
make up for it. So that wasn't terrible.
That was
It
awesome.
wasn't all bad.
The Mark Rippon Super Bowl. That was
Yeah.
fun. That was a fun one too.
All right,
That was in
dude.
91,
We
92.
want to tell people where they could follow you for more. So I have a whole bunch of links here. I have bluelinefutures.com/Bill-Baruch. We'll just tell people Blue Line Futures, right? I have your Twitter, x.com/Bill_Baruch. And
social. What's a good social for you?
That's his
The
social.
Twitter, and then BlueLineCapitalWealth.com.
BlueLineCapitalWealth.com. Okay. And you're on LinkedIn too.
Yeah.
You're everywhere.
Yeah.
All right. You having fun doing halftime report?
I love it.
Yeah?
It's been such a great. And I'll tell you, it's so great being able to go to the New York Stock Exchange to do it. It's like humbling walking into that. every
Dude, it's
time.
pretty epic, right?
Yeah.
It still is. It's still like a magical building.
Yeah, it
I
really is.
agree. Well, I love being on with you, as I said. So thanks for everything. Thank you for being on the show. We
Thank you.
appreciate you.
Thank you.
All right. Bill Baruch, ladies and gentlemen. You guys, thank you so much for buying out all the tickets for the live Compound and Friends that we're doing. We appreciate you guys. We're super excited to see you all. That's coming up very soon, October 24th. And man, what a night we have in store for the Compound fans. Huge thanks to Duncan and John, who are in the room with us today. Rob, Nicole, Graham, Keith, the whole team. We appreciate all of you. Thank you guys so much. And thanks to you. Like and subscribe. We'll see you soon.